Okay, good evening. Today is July 21st, Tuesday. I am Tim the Source Anderson, and this is the evening edition of the Anderson Report. A lot of action in the market today, uh, quite a bit of intraday volatility. I think when all was said and done, it was quite positive, although the market averages did come off their highs of the day quite a bit. The Dow spent quite a bit of time during the first half of the day flirting with the 27,000 level, which would have been up about 300 points. The Nasdaq started the day right up against that 10,800 level after its big day yesterday. That didn't last very long at all. Within 30 minutes, 30 minutes into the day, the Nasdaq was well off its opening levels. Toggled back and forth between moderate gains and losses most of the day. Settled down near the lows of the day, actually, but only down less than 1%, down 0.8%. The NASDAQ went out at 10,680. It did scratch 10,800. It had been up 2.1, 2.2% yesterday after some very positive comments on some of the leaders in the NASDAQ composite from a couple big brokerage firms that have clout in the infotech space. So again, like a week ago Monday, when NASDAQ hit 10,800, up 2% midday, and then reversed, had a 4% reversal that day, this 10,800 level was pretty serious resistance for NASDAQ today. Look, it went out at 10,680, still having a very good month. And we'll get into that, some more details on that just in a little bit. The S&P 500 traded as high as 32.75. It went out at 32.57. Up only a little over 5 points, less than 2/10, just about 0.2%. But the S&P 500 is still holding its move above the June highs, which was the 32.33 level, give or take a couple of points. So the S&P 500 still a positive day. The Dow went out at 27,000, at 26,840. It flirted with the 27,000 level for most of the day. It was up 160 points. It had been up about 300 points, a little bit more. So it gave up about half of its gains, a lot of it during the last 90 minutes of the day. Now, the Russell 2000, I've talked about it quite a bit over the last week and a half, was the standout performer of the day. It went out at 1487, plus 1.3%. And the significance of that is where the Russell 2000 for the last 4 or 5 days was hovering just the smallest fractional amount possible above its 200-day moving average. It made a good move off that 200-day moving average today with a 1.3% gain. Remember, it gained 3.5% last week. And as we'll get into in a couple of minutes, that's a sign that the rally is broadening out significantly. A very positive sign. Okay, so today started really with the very positive news that the EU had reached a big, gigantic stimulus package, 1.8 trillion euro, about 2 trillion US dollars, Some of the numbers had it at about half of that. It depends on what you're really including in it. Um, it was received very well by the markets right out of the gate, as were earnings from IBM last night and from Coca Cola early this morning. IBM started the day with a positive note. It faded as the day went on, closed just down fractionally. Coca Cola still finished with a 2% gain, even though its revenues for the second quarter, surprise, surprise, fell off about 20%, almost entirely due to the coronavirus. The revenue shortfall for Coca Cola was a little bit less than what some people were expecting. Okay, so the other big thing affecting the market, and we'll get this, we'll have this in play tomorrow. We'll have it on play pretty much every day for the remainder of the week and potentially even into next week, is this stimulus package that the administration is working on with. This would be stimulus, coronavirus stimulus 4.0, if you want to call it that. And there is not even total consensus within President Trump's economic advisors as to the best way to go on this. And of course, the best way to go is somewhat being influenced by what can pass Congress. And I think that what a lot of people in, if you want to call it the Larry Kudlow camp, want payroll tax cuts, it's going to be very difficult to get that through Congress. I would agree that in the perfect world, payroll tax cuts would be exactly what the economy needs right now. It's just going to be tough to get that through Congress. Now, there will probably be some stimulus checks. There will be some incentives for businesses to bring workers back, and there will be either an elimination of the $600 extra kicker from the feds for weekly unemployment insurance, or there will be a significant reduction of that. So I think that what you have to realize is the market's pretty much ambivalent. Okay. It's agnostic on this. The market just wants as big a package as it can possibly get that would, in some form or another, end up as cash in the hands of businesses, consumers, employees, workers, etc., etc. And then the market would get a very positive reaction to that. But where I think we gave up most of the gains late in either in the last hour, maybe the last 90 minutes, when Mitch McConnell came out with a statement saying that he doesn't think that the package will pass by the end of the week. Now, that might mean it might pass over the weekend. It still might pass late on Friday. McConnell is great at signaling not only to the press, everybody's listening, but also to his base and the key people in the Senate on the Republican side that might be pushing back on an additional stimulus. I believe that Rand Paul was in front of a camera today talking about how we've already, we can't keep spending federal money, blah, 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 blah. Clearly, that's a rant that you're going to hear from him constantly. And, believe me, but that McConnell will see that something in some form goes through. And there may be some very interesting posturing and statements from him along the way that you kind of have to read between the lines on. But that being said, the market has a lot of potential volatility the remainder of the week, while it's undefined in what form and when a new stimulus package will be passed. So just be aware of that. Now, I gave you pretty much the market averages, well off their highs of the day. Nasdaq still had a great day. Look, the advanced decline numbers today, which was basically what I call the breadth of the market or the market internals, were absolutely phenomenal. They were positive 3-1 at the NYSE. And even though the NASDAQ composite, they're actually much better than 3-1. They're almost like 3.25. Well, like 2250 to 700. Much better than 3-1. In the NASDAQ market, 3,200 stocks. The NASDAQ, it's a capitalization weighted index, the NASDAQ composite, down 0.8% today. Clearly some well-deserved profit taking among the big names that I've talked about ad nauseum for a couple of weeks, the companies that are really driving the internet traffic trade. But on all of NASDAQ, over 3,200 stocks, advancers led decliners by better than 3-2, almost 2-1. That's very consistent with the Russell 2000 outperforming the larger market cap averages with a 1.3% gain. I don't have the stats right in front of me for the S&P 400 mid cap or the S&P 600 small cap. I'm sure they were both up 1%, probably within a couple of decimal points of what the Russell put out at plus 1.3%. The breadth numbers are positive. It shows that the rally is broadening out into areas of the market away from just infotech communication services and the big mega cap momentum stocks driving the NASDAQ rally. So the obvious question is, where is the market rally broadening out to? Okay. We have mentioned a few things today, but we have mentioned a few things over the last few days. But the one sector that really needs to be talked about today was energy. Now, oil has been in this 39, 41, just below 41, can't quite get the 41 range. It's kind of been trading 39.25, 39.5, up to maybe 40.75, 40 spot 75, spot 80. And we've talked about quite a few times. Look, if it can kind of use that 40 level as a support level, that's probably a threshold that a lot of energy investors are looking at. Well, it had a big move up today. Crude oil went out at 41.76. It was up 2.3%, scratched at 42 a few times, middle of the day. That's basically the market for oil catching up to how the supply demand dynamics have shifted as big parts of the business community globally has really gotten back to work. And also, the energy sector was up over 6%. Now, the energy sector got a very good boost today. And, yesterday it might have been, let me just check one thing here. Yesterday, I didn't note energy yesterday. I think it might have been up like about 0.5% yesterday, up or down 0.5%. But energy is getting a big boost also from the deal with Chevron buying Noble Energy, a major sign of confidence from a big multinational energy company. And not only a big multinational energy company, but probably the cream of the crop, even more so than Exxon right now. Chevron is just seems to be doing everything right. They're buying Noble Energy. It was announced on Monday, and that is just a major sign of confidence that they view the energy market's going to be okay. They are going to be a long-term player. They are going to be a global leader. and they took the weakness of a lot of other energy companies in the market as a way to look at if whether or not there were interesting opportunities out there for them strategically, and they decided that they just couldn't pass on the opportunity to buy Noble Energy, the sector up 6% today. uh, Financials also had a good day, up 2%. Industrials up 1.3%. They were one of the best acting sectors in the market last week. And the material stocks up 0.8%. They were also one of the best acting sectors of the market last week. So now with Nasdaq coming off of its level, the big question is, and I had it today on Fox Business, is where is the market leadership going to come from if the big momentum drivers of the Nasdaq Composite are going to lose a little bit of steam right here? And look, to say that they're not going to have the performance the second half of the year that they had the first half of the year, the Nasdaq Composite was up 17% in the first half of the year. Okay. That's not off the March lows. That's from December 31st to June 30th. The Nasdaq Composite was up 17%. It is just not going to put those numbers on the board for the second half of the year. It just can't. It's just not going to happen. Okay. So the Nasdaq is up another 5%, between 5.5% for the month of July, even with a little bit of a pullback today. So you're talking about up 22% year to date. Even if the Nasdaq was unch from here to the end of the year, and the Nasdaq Composite finished the year a little bit north of where it is right now, it went out at 10,680. The Nasdaq would still be up 22% year to date. Those are just off the chart numbers. Now, there's a reason for it, obviously. The whole infotech sector at the mega cap level is just crushing it with the internet traffic trade going through the roof from people doing a lot more streaming, a lot more working at home. You've heard me talk about this over and over and over. But the NASDAQ cannot duplicate its performance that it's had in the first half of the year, again in the second half of the year. So if we look at where it looks like the big Dow investors globally are doing a little bit of sector rotation into, clearly it's the cyclical names. It's the industrials, it's the materials, and energy would certainly be a cyclical name in this landscape. Now, I did have the question a couple times, a little bit today from people DMing me or coming at me on Twitter. When we talk as to just define cyclical names a little bit. So the economy has cycles. The economy will, when the economy has been flatlining, maybe in the doldrums, not really in a recession, but just kind of treading water, and then something happens and all of a sudden the economy really starts to pick up, that means it's going into a big growth cycle. The names that will lead that are the cyclicals or even the early cyclicals. Those are the names that are the biggest beneficiaries of signs that the economy is about to pick up and have a real good stretch for the next year, year and a half, 2 years, 3 years. Okay. Cyclicals can be forest and paper stocks. Cyclicals can be railroads as railroad traffic picks up from stuff being shipped around the country, stuff being taken off ports that's being coming in from the west coast, and the railroad traffic uh, to and from Mexico. So cyclicals would be like materials, paper products, chemicals, anything in this, not really just raw materials, but raw materials would be part of it. Everything that's used for big companies to make other stuff with. The steel stocks would certainly be cyclical names. I haven't taken a good look at them lately. Um, and but the railroad stocks would certainly be cyclical names, as would uh, energy, forest products, material, other materials, chemicals, things that lead into the industrial area. Now, this expansion is a lot different than the expansion we've had many times in the past, where maybe the market's been troughing, the economy's been kind of in the doldrums for a couple of years or a few years, doing okay, but not really accelerating, because we had a very obviously a self-imposed economic shutdown, a very, very sharp decline in economic activity, basically kind of a flick of the switch. Let's just turn everything off for 6 weeks and then turn it back on. So probably the biggest ramp back in employment at one point, and in commerce activity, you'll see in a lot of parts of the service sector of the economy, since the service sector is 70% of the economy. That would be um, hotels, restaurants, just people going out and living a normal life that they're much more accustomed to. We've gotten a little bit of that. We're either at 25 to 50% capacity, maybe at some places a little bit more than that. We've hit like a little bump in the road with the big increase in coronavirus cases around the country. But it doesn't really seem like it's going to turn into a complete nationwide shutdown, not nearly to the extent that it was. The hospitals don't seem to be overloaded or overflowing with people that they can't handle, although occupancy rates are definitely up in high population areas, South Florida, parts of Texas, parts of Arizona, California, et cetera, et cetera. You've seen all the headlines, you've seen all the stories, I'm sure, and you've heard me talk about a little bit. So uh, what the market's telling us is that even though the Dow's hitting resistance at 27,000, it was at 18,000 the end of March. The S&P is, got above its 200-day moving average, got above its June highs. Let's see how it handles all the volatility that might come at us from headlines about a stimulus 4.0. And the Nasdaq has just been off the charts, putting it lightly. Up, I don't even have the numbers in front of me, well off 30% from its 35% from its lows in March. But what we've really seen the last week and a half is the Russell and the small cap stocks doing a lot better. Possibly some money, some people taking some well-deserved profits in that big internet traffic trade. Not that those companies won't still do well the remainder of the year and going into next year, but up 17% in the first half of the year, it's just not gonna be able to repeat that. Well, John's asking a question here, and it's a great question. If you're advising President Trump, what would be your recommendation on the next stimulus bill? Well, it's really a two-part question. And I got into this a little bit right at the beginning of the broadcast. But if you just jumped in, I'll go back to it because I think it's very important, and it's going to definitely be a headline issue for the markets over the next few days, possibly even into early next week. You got to come up with a bill that's going to pass Congress. So, your best case scenario bill of a payroll tax holiday through the end of the year with some additional um, uh, stimulus for incentives for businesses to bring workers back, eliminating and curtailing the $600 extra weekly kicker from the feds. It's probably just not going to pass Congress. You're going to have to give the 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 Democrats a few things on their wish list without doing stuff crazy that the far left radical wing of the party would say that they're demanding as part of the next stimulus bill. Look, you know, they started talks today, I believe. I think that this guy, Steve Mnuchin, who's the Treasury Secretary, has had a as good of a working rate relationship with Nancy Pelosi as you could possibly have if you were a leading member of the Trump cabinet. Um, and I think that, you know, if you're on a little bit more, if you're more in the um, Larry Kudlow, Art Laffer school of thought, although Art Laffer's not really part of the administration, my understanding is he consults with both Kudlow and Trump frequently. Um, you're just not going to get the best case scenario payroll tax cut, payroll tax holiday, all the way through the end of the year without throwing in some things to get enough Democrats in the House to vote for it. So there's going to be some compromises involved. Mnuchin has been pretty good at that so far. You can't be totally idealistic and come up with a bill that's going to pass Congress. So I'm sure there will be people like Rand Paul and other people that are totally freaked out over the amount of money that the government's spending on all the stimulus stuff they've done and how much money the Fed has been assisting with. But they're just going to have to deal with it. How big is limited liability is another question from John. It's a great question. Look, you got to get these businesses back online, and you've got to get these businesses to the point where they're not you can't have them feeling like they're potentially going to get piled on big time with class action lawsuits or with individual lawsuits from anyone that comes in that comes in contact with any of their workers or anyone that works in their plant comes down with the coronavirus, because that will just be a crushing blow on the momentum of getting the economy dialed back in. Now, that being said, if there really is a incubation period where people can have the virus and be asymptomatic, and there is some controversy over whether or not that really is the case, I just don't know how. I just don't know really how a legal liability lawsuit would stand up, because I don't know how a certain individual or groups of individuals would be able to say with certainty where they got the virus from. But John, your question is a good question, and I'm sure that there will be some language to that effect in one of the bills that goes through. Please, anyone that has more questions, shoot them in here. and I'll get to them. There's a couple other things that I think are worth discussing. And there were some pretty interesting earnings after the close today. If you want to have a snapshot as to how the uh, virus instigated self imposed shutdown has affected the airline industry, take a look at United Airlines earnings for the second quarter. Their year over year revenue for Q2, which just ended the end of June, versus Q2 of 2019. And when companies report earnings, they always report on a year over year basis. So when a company reports earnings, it will be annual earnings for 2020 versus what they did in 2019, or it will be second quarter earnings for 2020, not versus the first quarter, but what they did in the second quarter of the previous year, because that is the legitimate comparable. That's very different than when you get retail sales numbers. And we had retail sales numbers come out last week, and June retail sales were up 7.5%. That was 7.5% over May, which was up 18% over April. Those are sequential numbers in the retail sales area. So, United Airlines reported after the close tonight, they lost $9.30 a share. They lost $1.6 billion for the second quarter, and their revenues were down 87% versus their revenues in Q2 for the previous year. We knew it was going to be a very, very, very sharp decline. Those numbers are just shocking. Now, so what's the stock done? Look, in early June, there was this massive buying panic in the airline stocks. A lot of it was a short squeeze by some comments that, okay, we're going to start flying again, da, 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 da. And so United Airlines traded $48 in early June. It was only up there for a couple of days. It didn't last there very long. It went out today at $33. I think the low in both April and maybe the low in March through May was about between 20 and 22. A couple different times United Airlines got that low. It went out at the end of the day at 33. I did not listen to the conference call. The high for the year was $89.74 in early January. So the stock is down 2/3. It's lost 2/3 of its value. The revenues are down 87% from the second quarter a year ago. On the other side of that, Texas Instruments had pretty good numbers. Now, Texas Instruments isn't necessarily one of the ultra real hardcore rock and roll big momentum names that you hear about with Google and Apple and Microsoft and Facebook and Tesla and Amazon, et cetera, et cetera, et cetera, Netflix. But it's really right there. It's still a big infrastructure play for all of technology. And their year over year revenue was down 11.7%. Probably could have been worse. Their revenue, their numbers came in, earnings per share. They made $1.15 a share in the second quarter. That was versus consensus of 88. Definitely down from the prior year, but it's just an example. The dichotomy between what United Airlines, with their revenue year over year down 87%, and Texas Instruments, with all of their business really to the tech, not just the tech world, but people that have maybe been doing tech upgrades because of so many of their employees working at home. Their year over year revenue for the second quarter only down 11.7%. Probably the only environment where you'd ever hear someone say their revenues were only down 11% year over year. So that's kind of the positive side of it. Um, One other thing, I hate to even mention it, but one other thing to mention is that the VIX traded. The VIX is the volatility contract. That's not doesn't really measure volatility, but kind of measures fear in the market. It started out down on the day, traded a little bit below 24. Just to give you so when the VIX goes down, that means that everything's rosy and people feel the market's never going to go down again and the market acts great and there's very little fear in the market. So on June 5th, when the last time the Dow traded above 27,000, when the S&P had that stretch when it put in its highs in early June, Nasdaq had a big run up, got through 10,000 for the first time just before it failed, and we had that big down 5% day. The VIX that day got to a low level of 2450. It traded a little lower intraday today. Then when the market started to sell off, it went up to 25. It went back down to 24 and a half. It went out in that 25 and a half, 24 level. The VIX is something that a lot of people look at as a measure day to day and sometimes intraday of whether or not there's near-term risk in the market or really a bullish, bearish sentiment indicator for professionals. So we really should watch the VIX the remainder of the week. I think there's going to be some volatility to it. I think it might have a hard time going a lot lower than 24, where it was during the mornings, the first half of the day. But it's worth watching. I am not a big fan of a lot of people will talk on TV about trading the VIX. I would advise people who, unless you completely understand how the contract is constructed, and it's very different than a lot of other options and futures contracts, I would advise against trading it. I think people that trade their own money, unless they are seasoned professionals and really understand the VIX contract, I think people that are just trading the market, maybe a little bit willy-nilly on occasion, probably lose more money trading the VIX than any other product out there. It's very misunderstood, and it's a very difficult product that unless you time it really, really right to hold the thing for 3 to 5 days and make money. Now, if the market were to go down, if people were to buy the VIX tomorrow and over the next 4 or 5 days, the market were to go down 5 to 6%, yes, the VIX would go higher. You'd be okay. But it's a product that when you're trading it, your timing has to be very, very good, because there's a lot of what we call, I'm not going to get into it at length, embedded premium in the VIX product, where that deteriorates over time before the next expiration. And the expiration is not when you think it is. It's always on a Wednesday, which is what I say, unless you really understand what the VIX represents and what the specifics are behind the contract, I strongly advise against trading it. There's so many other things out there that you could trade. So that's my caveat emptor speech on the VIX contract. It's worth watching the remainder of the week. 24 is a key level. I don't like the idea of trading it. We're going to have some earnings tomorrow. We're going to have Chipotle. It was a hot stock for quite a while. They're going to have a bad second quarter. Everybody knows it. I think they made $9 last year. The estimates are below 50 cents. Maybe they're down so much they beat that. Number of other earnings also. Other than that, that's kind of what I have. I'd certainly encourage everyone to, if you like the broadcast, subscribe to the channel. It's The Anderson Report on YouTube. I tweet out the link to it every day before I'm going to do a show. The shows usually go on at 7 p.m. I know it's not a perfect time for everyone, but it's always available on replay. It's about 45 minutes, so I think it's a good time. People can watch the replay if they want without taking up a good chunk of their day. You can also watch it on Periscope at TJ Anderson 12. If you're watching it on YouTube and you want notifications of when the next show is going to be, hit that little bell next to the subscribe banner, and then you will get emails, most likely, notifications, might pop up on your computer as to when the next broadcast will be. It'll probably be tomorrow at 7 o'clock, but confirm on my Twitter uh, thread, confirm on my Twitter stream tomorrow. There'll be some earnings to talk about, and I think we'll still have some more market volatility the remainder of the week. Everyone, have a nice night and have a great rest of the week. Although we'll probably talk to you again tomorrow.